Welcome to this week's episode of Accredited Investor Markets Radio. Each week, we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello everyone and welcome to Accredited Investor Markets Radio. I am Christopher Cahill. Later on, I will speak with Lior Lavy of Artizone. Artizone is a new enterprise but very successful. It brings together information technology and wheels in order to bring together artisanal food and those who crave it, and in the process to make more people crave it, I take it. But first, let's talk about the low interest rate environment. Isn't that what you want to talk about? But let's talk about it, because maybe the low interest rate environment explains everything. All right, that's false. In addition to low interest rates, or interest rates generally, currency movements, regulatory policy, trade policy, tax policy, levels of government spending, those are important too in explaining general economic trends. But low interest rates do help explain the search for yield, to the extent where the search for yield might even lead to large, sophisticated entities simply betting on litigation. The low interest rates may also, together with regulatory policy, help explain the growth in peer-to-peer lending. Both these things we'll talk about in this segment. First, in the 1980s, there was a movie called Star Trek III: The Search for Spock. These days, such a movie might be entitled The Search for Yield. Now, I don't remember, because it was too far back, whether they actually found Spock. But the question here is whether they found yield. And in the Wall Street Journal article dated June 12, 2015, authored by Matt Jarzynski, entitled Litigation Bets Burn Funds, well, you can tell by the title, they did not find yield. So what's the story? Well, you remember the financial crisis. There were some entities that purchased collateralized mortgage-backed securities and such instruments during the frozen liquidity days, and sold them later when liquidity was unfrozen at very handsome profits, because they bought low and sold at close to or at face value. Others, and these are the subject of the article, more recently purchased bonds of a defunct bank, wagering that they would be paid in full by some hapless third party. In 2008, WAMU, remember WAMU? Well, Washington Mutual Bank was the sixth largest bank in the United States with assets of about $328 billion. WAMU was seized by the Office of Thrift Supervision and became subject to a receivership under the FDIC. While in the receivership, the WAMU Bank, as well as other banking affiliates, were sold to JP Morgan for $1.9 billion. All right, well, it wasn't that JPM got $328 billion by paying $1.9 billion. JPM also had to assume liabilities of WAMU Bank, but not all liabilities did JPM believe it was assuming. JPM believed it was assuming secured debts and the obligations to depositors. What JPM actually assumed was the subject of intense litigation since then. Remember, the FDIC held the assets of the Washington Mutual Bank and sold them to JPM, but did not, according to JPM, sell all of the liabilities of Washington Mutual Bank. Well, the FDIC asserted that JPM is liable on unsecured bonds of Washington Mutual Bank in an amount exceeding $6 billion. So $6 billion in bonds are at stake. Investors bought these bonds for pennies on the dollar, betting that the FDIC would prevail in imposing liability on JPM to pay the bonds. Well, you see, if JPM is liable, its very deep pockets will pay the face amount of the unsecured bonds. If JPM is not liable, the FDIC will be responsible, and it may not have the funds to pay much, if anything, on such bonds. The United States District Court decided it wasn't JPM, who is liable on the bonds. It's a sealed opinion at this point, so I cannot give more details than I've gotten in the press. But the point is the big boys lost their bet. Among them, Appaloosa Management LP, which, if you follow distressed investing, is a very big boy indeed. The article details other such bets and quotes an analyst as saying, quote, "There's a lot of money chasing very few ideas right now, many of which are very binary in their outcomes," end quote. Binary indeed. You win big or you win nothing and lose your investment. Low interest rates, leading to low yield on vanilla investments, increase and enhance the appetite for even unusual risk among investment entrepreneurs. But what do low interest rates have to do with peer-to-peer lending? Well, I was moved to talk about this from an article in the Wall Street Journal, June 4th, 2015, entitled, "China's Peer-to-Peer Lenders in the Fast Lane," end quote, or that's the end of the title anyway, by Denny McMahon. So what is peer-to-peer lending? Why is it there? What's the need it meets? Well, the need it meets is for financing for lower scale, smaller enterprises who cannot get financing from banks. When interest rates are low, you get less of a bang for each individual deal. For a bank, small loan deals have small bang to begin with, and with low interest rates, that bang is further diminished. You need more and more of such deals with the attendant administrative costs and supervisory costs in order to get the same profit you would in a higher interest rates environment. So the unenthusiastic bank appetite for smaller loans becomes still less enthusiastic at such times. Banks prefer larger deals, and regulatory pressures imposed on United States banks, which are meant to enhance safety, also discourage banks from smaller deals. So who's filling the breach? Well, in the United States, Lending Club and Prosper Marketplace are two entities that engage in peer-to-peer lending for small amounts to small players, for an aggregate amount of over $10 billion in loans in 2014. The Wall Street Journal article talks about the Chinese context, in which peer-to-peer lenders made over $17 billion in loans in 2014. Now, Chinese banks are under some of the same pressures as in the U.S., plus additional pressures, being such a state-centric system, if I may put it blandly. But in China, as in the United States, peer-to-peer lending is filling the gap. All right, wait a minute. How do peer-to-peer lenders make money making $10 billion of unsecured loans? Well, the basic method in the U.S. is for a peer-to-peer lender to deal with underserved borrowers. They're not bad borrowers, they're just underserved. And in the U.S., you can rely on credit scores to provide relevant data. And then you spread the risk across many different investors in the peer-to-peer company so that an individual loss doesn't tell very heavily on any one investor. And the gains are quite handsome for all. Very similar in China, underserved borrowers, although in China they do not have credit scores that are reliable and must look on site. It's a bit more cumbersome. And perhaps the risks are greater for peer-to-peer lenders in China. The article reports that there were 1,575 peer-to-peer lending platforms online in China in 2014, but that by today 300 of those have died through competition or through their own fraudulent nature. So it's an exciting new field, peer-to-peer lending. Perhaps aided and abetted by low interest rates, perhaps it would have grown up anyway, because small-time borrowers have been underserved by banks for quite some time. But if you want to learn more about peer-to-peer lending, I refer you to two prior Accredited Investor Markets Radio interviews, one with Sam Hodges of Funding Club, which was put up just a few weeks ago, and another with Peter Renton of Lend Academy. Our print website, I say print even though it's all online, accreditedinvestormarkets.com or AIMkts.com features half a dozen or more articles on peer-to-peer lending and many more on related topics of alternative lending. But there's more to life than money, which is another way of saying there's more to do with money than try to get more money. You might even say that the purpose of life is to become healthier, wealthier, and wiser. Well, at least many would agree that's a purpose of life. Ben Franklin would agree, if Ben Franklin could speak. Although he does speak through his writings, doesn't he? Anyway, on the grand portal by which one gets to Accredited Investor Markets Radio, which is www.financialpoise.com, there is a section called Life Hacks. Life Hacks has to do with becoming healthier, wealthier, and wiser. It answers questions you may have had. For example, I am twice the size of my adult daughter, yet vitamins aren't sized. The same dosage for her as there is for me is prescribed on the vitamin packages. Is that right? Can her vitamins possibly suffice for me? Are my vitamins giving her too much in the way of vitamins? I'm not talking about men's vitamins, women's vitamins. I'm just talking about general vitamins. Another topic taken on in Life Hacks is kitchen sponge bacteria worthiness, and a topic near and dear to the hearts of those of us at Accredited Investor Markets Radio is a quality comparison of headphones. Here at Accredited Investor Markets Radio, we like to say that podcasts and the headphones on which one listens to them are the very reasons why God created mass transportation. On to the interview.
With me today is Lior Lavy. Lior Lavy is the Chief Operating Officer and co-founder of Artisanal, an online marketplace offering a curated collection of quality goods from local artisans and purveyors. Mr. Lavy is responsible for the day-to-day operations and marketing for Artisanal's 2 current locations, which are in Chicago and Dallas, in addition to directing expansion into new markets. Mr. Lavy also provides strategic direction and management of Artisanal's customer care activities and all go-to market strategies and brand awareness. He has 16 years of product management and software engineering experience, which must have helped in developing Artisanal's product delivery logistics model, which organizes each individual artisan's production and delivery timelines with each of the customer's orders, allowing for pickup of the products immediately upon preparation by the artisan and delivery to the consumer or business within hours. Now, the first thing I'd like to say, Lior, is that I looked forward to this chat because we are nearly neighbors here in the Chicago area. Even closer to me is the Green Grocer, a splendid organic grocery store at Grand Avenue and Noble Street, right around the corner from me. And I drop in there most days. That store is my trucker's grocery store to those who have discovered Green Acres on TV land. So I propose that first we speak of your enterprise and then of investor opportunities in the broader sustainable foods industry. And before that, I'd like to say, and thank you for being on the program.
Thank you for having me.
All right. So as I look at it, Artisanal creates efficiencies where none existed, business to business and artisan to eater. Do you agree with that?
I'm going to say that we met sustainable and we met local during our way. When we started the journey, it was not about sustainable and it was not about local. It was about artisans and foodies, to be perfectly honest. But yes, the more we looked into the business of artisan food, we saw that the real passion and the real fire is with those sustainable growers and local purveyors that struggle in the huge chain world of Kroger's and Safeway. And we realized that what we can offer to the market is much more than just an access for a foodie to get a better steak.
Well, that's interesting. You started out yourself with a kind of aesthetic insight, which is get the foodies and the artisans together. And then you happened upon a more, theoretical or even quasi-political view of localism and sustainability, as well as noticing just how bloody hard it's a blood sport getting stuff onto the shelves of these big stores, isn't it?
Yeah, yes, because, in early life, we were basically engineers or high-tech people working on whatever it is that we wanted to do, and we had a hobby, and the hobby was cooking. And you're searching for the great source for meat or for fish or for a spice, but you don't really think as a consumer what goes into having a much better chicken on your plate. And then when you try to work with those businesses and you discover the world that is behind the product, this is where it gets really fascinating and then fun. And so eventually the end result is efficiency, but the soul behind it or the spirit behind it is much, in my opinion, much deeper than just efficiency. It's really enabling those vendors to be in business.
And the vendors, we're talking about the artisans, they really don't have a prayer of getting on the shelf at Safeway or Jewel, do they?
So obviously, when you're working with more than 200 of them, then some of them do and some of them don't. Obviously, you catch them in different places of their life cycles. So some of them are more established name than others. Some of them, the term artisan, if you open the dictionary, you're going to find one thing, but reality is a bit different than what you read in the dictionary. And to me, if you are a fishmonger and you decide how to source and from where to source, and you decide what's going to be the special menu of your shop, then you're bringing an artisanal view to the fish business, even if you're not the farmer who grows the fish. Because the curation process as standalone process is also some sort of an art.
Mm-hmm.
And so some of the artisans, like our fishmongers, will never try to be on the shelf in Jewel or in Kroger or wherever, but they have a business to sustain side by side by the existence of such a huge grocery store across the street from them. They will never be on the shelf, but they would like to stay in business, and I would like for them to stay in business as well.
Well, the first thing I'd like to do is congratulate you for bringing the word fishmonger back into normal usage. I've always thought it was a great word that should never have gone out of usage. But secondly, is part of your model to create demand or to enliven latent demand for the products of your artisans?
I'm gonna answer it with, first of all, with the symmetry of congratulating you on the word latent, because when we started the business, we bought research done by an INSEAD professor about latent demand for specialty food in 2,000 cities around the world. And we cross-referenced the information from this research about what would be the consumption in 2004 and 2009 compared with the actual consumption that was known to us in 2007. And based on this latent demand prospect and the actuals of 2007, we decided what should be the markets that we start from. So the word latent demand has a very special meaning to me in the context of our view. But talking about developing it or creating some more, I think that the average consumer doesn't always know how much value she can find in an artisanal product. The nutritional facts about an heirloom tomato or an heirloom corn, or if it's even, you can call it environmental values in consuming a local product, or just enjoying a more colorful experience on your palate. And so bringing knowledge and ideas, and to be more specific, recipes and pairing options of products that she doesn't know with products that she does know is the way to, in a way, create a little bit more demand and also put the topic on the agenda.
Okay, so the software engineering chops help with the just-in-time, if I may use that phrase, nature of delivering artisanal products to purveyors and to individuals. But your website has loads of recipes, and it's very colorful and fun. And I take it that's kind of what you were just talking about.
Yeah, I think that trying, if you look at the website and if you try to write it down as a feature list, you can browse the website using your aisles navigation, and you can browse the website by the different stores and artisans, and you can also browse and discover the website through the recipes or even through shopping lists people create and can share with their friends. So when you come to artisan.com, there are many ways for you to, if you think about it like a farmer's market, it's like a farmer's market that comes with different indices and different catalogs. And you just pick one, and then the catalog takes you from one place to another and shows you what you can find and how you can use it. And the reason that we added so many navigational ways and so many navigational venues was exactly because if you only go by the aisle or if you only go by the store owner, you wouldn't meet half of what we have to offer because you wouldn't necessarily go to those places.
The image that came to my mind as you were talking about being able to gain access to farmers markets all over the place through your website was that you're really kind of able to apparate, to use a term from Harry Potter. You can just go from farmers market to farmers market and find exactly what you want after having been educated and enticed by recipes on your site and by growing awareness otherwise of artisanal food, I would suggest. And yeah, so we can apparate in our age. Let's turn toward investment for a bit, and then I'm going to want to return to that special report that you read about future food trends. The web van, that's WEBVAN, experience was meaningful to Artizone, but I'd like you to explain how.
Let's go back in time.
Yes.
It's from a different movie. So it's 2009, and we are sitting, the 5 owners of the company, we are sitting in the living room of the VP of R&D, Research and Development, and he throws the idea of let's build a new online grocery shopping website. And he said, but let's make it very fun in terms of the experience. And so the next sentence was, and then if someone who makes jams wants to open a tasting stand inside this online grocery shop, then we should allow her to do that. And so we started to talk about this gem-making lady and what would she need in order to be able to open the shop and so on and so forth. And we forgot the regular grocery products and we only focused on her. And so we are sitting and we are having this conversation of talking about how to build the artisan online channel and how to allow them to put the products out there. And this is pretty much got us to where we are. Now, I'm sorry to say it like this, there was a point where I was going, but I was distracted, so you're going to have to remind me the question, and then I'll finish the sentence.
Well, okay, but we've had online grocery delivery experiences before, and Webvan was one of them, and it didn't last very long. It attracted a great deal of money and collapsed in short order. Again, that must have been of some moment to you, even though you're not doing exactly what they were doing.
When we started to fall in love with the idea of a business grocery shopping website,
yeah,
we said, okay, let's start to learn this arena and see what's out there. Because to be perfectly honest, in Israel, I'm buying groceries online since 1996.
uh-huh.
There was no parallel to Webvan in Israel.
Uh-huh.
All those who started, when they started, became something that works. They didn't invest so much money and they didn't lose so much money. They're just working. But when we looked at what happened in the United States and we read about Webvan, it was oh my God, maybe we're going in the wrong direction. So we learned that they had acquired a company called Home Grocer, and we tracked down the CIO and the CMO of Home Grocer, and we added them to our advisory board. And they were on our board meetings for the first, I think, 2 years. And they helped us make sure that at least we don't go in the direction that they went or Webvan went. So the first thing that we did was to make sure that we do not carry the inventory.
You do not carry the inventory?
And that's a crucial at all.
Okay.
So if you think about the business model of how Artisan works, Artisan is a facilitator of the deal between the artisan and the consumer. We bring them to the same place. We then provide everything that needs to be provided for the online experience to be perfect. So we provide a website and we provide a home delivery service. But we do not own the products ever.
Or store them by and large.
There's a little asterisk over there. So we do those products that have a long shelf life. It makes more sense to keep them in our warehouses, small quantities, and we will deliver directly from there. So, you know, some jams and some other jarred goods will be stored in our warehouse, and we will deliver it directly from there. But we don't own the inventory. We don't buy it. We don't shrink it. And the artisans, those that operate the store or operate the business, they know their demand. And if they don't sell it through the online channel, they can sell it in other channels. And so, as an online channel, we do not suffer the huge investment that you have to put on the table before you can start operating.
So an investor evaluating a company like yours would take a look at your software solution, which is really the website thing, the website design, and also have some estimation of your ability to learn about artisans and attract new artisans, replace artisans when artisans fail, and so on. In other words, that you know a great deal about the local artisan market around Chicago and Dallas, for example.
I think an investor would look at the potential of growing the market for artisanal goods and making a better or bigger room for this market in the overall grocery consumption market in the U.S. And would ask himself, is it going to become a thing? And in order for it to become a thing, do the current systems support what needs the support there? So, and in my opinion, the current logistics models of, you know, trucking and warehousing and the distributors and brokers between the vendor and the consumer do not work when you're talking small batch.
Yep.
Because the supermarket doesn't know how to get a caseload of a product. The supermarket knows how to get a truckload or a pallet. And the consumer, therefore, cannot go to the supermarket and find those products. And I think, in my opinion, online shopping is the only way to really reach your demand as an artisan.
To the extent the American consumers start behaving more like Israeli consumers and become even more conversant with online shopping, and this is bound to happen as older people disappear who are used to other things and the population becomes all people who are used to online shopping, well, then there should be a greater scope just for that reason alone for something like your business.
So yes, and again, take it to the next level. You have to have a technology in place that respects the way small businesses work.
Mm.
There's a nice quote from a small business that tried to work with Amazon Fresh Local actually, and this business owner says they expect us to work like they do, and therefore, you know, the artisan can't do it.
Mm-hmm.
And with us, we invested a lot of time and hundreds of artisans that work with us to model their business, to really understand what it means to operate a small batch operation or a small shop. So you have to model the working hours into the deal, and you have to model the shelf life of the product into the deal, and you have to model when I say deal, I mean, you know, your software.
Yes.
And you have to model the preparation times, and you have to model the capacity, how many orders per day they can do. And you have to model their throughput, how many products per day they can do. And you have to build a system that allows the shopper to put an order into the system and see that they cannot get the pie from Bang Bang Pie tomorrow because they are fully booked, but they can get the pie for the day after. And if you're trying to balance hundreds of artisans with tens of zip codes, and thousands of customers, you need to have a good modeling system in order to really be able to place even one order in the system and have it prepared and delivered on time.
Forgive me for characterizing your business, but it sounds like a 21st century version of Zabar's from the Upper West Side of New York, which has everything, and it's the only store that has everything, for its clientele, and composed mainly of specialty items from around the world and around the country, although you have a focus on local artisans. Do you think that statement makes any sense?
I think so. I think that Zabar is a great example. And first of all, thank you for the comparison. It's a compliment. And second, even if you take Green Grocer as a small-scale Zabar, Green Grocer is an offline artisan. They don't have everything and they don't carry everything, yep. But they are a small-scale artisan. And by the way, as a store, they suffer inventory issues because they can't allow a lot of everything, and so they have to buy small scale. And when they buy small scale, obviously it's a store, you have an issue of how many you have on the shelf. Mm-hmm. And what happens if, for whatever reason today, the sixth customer comes to the shop and wants the same product, and all of a sudden they don't have it. And also it's a question of price, and I think that when you go online, you capture not only the walking traffic around the shop, but you're capturing the Metroplex, which has obviously many more options.
Well, okay, so this is scalable, and you are in Chicago, you are in Dallas. What's next?
So we are just now opening Denver.
Denver.
Yeah, it's a fun city. It's a fun city, and because we are a startup and because we are trying to do new things, there was always a logistics model that I wanted to test when we started, and we decided to test this logistics model in Denver that would make the launch even more efficient. And so in Denver, we're going to try a different model. People will be able to place the order by noon and get it from as early as 5 p.m. on the same day as a result of that. And that's fun. I mean, I'm not going to lie, I'm excited. We are doing our first dry run on the 29th of April. And if this goes well, we're going to open the website for friends and family, and then the big launch.
Well, wonderful. There are two other things I'd like to look at. First, you mentioned earlier a study which was completed, I think, in 2007 regarding latent demand for specialty food, and which projected certain changes by 2009 and thereafter. How accurate was that study? Were their projections more or less on point?
So you can't really tell, and I'll explain what the research was and then how one can read it. So the study goes and says, let's look at the demographic of people who actually go to specialty food stores. Those who go to the butcher, and those who go to the fishmonger, and those who go to the cheesemonger, and those who go to the specialty oil store, and see who those people are. Disposable income, education level, age, and so on and so forth. Then they say, based on that, how much could market in Dallas or in Boston or in Chicago, it doesn't really matter, consume from specialty food stores if the supply was there.
Yep.
And then it put numbers.
Right.
And then we compare those numbers with the actual volume of business of specialty food stores in those cities. And what we saw is that in some cities the report is right on the money. So San Francisco was close to 100% consumption of what this report was saying. And Boston was even more, I think. But there were some cities, Dallas was a great example of one of them, and Chicago was another good example of one of them, where the latent demand based on this research is way under-exhausted, way, way, way under. And so you ask yourself why, like what happened, right? So it's a combination of factors that got the stores to close down because Central Market opened and because Whole Foods opened and because there are many more supermarkets that are available around the corner and the specialty shops are basically disappearing. And so the population is there, the education is there, the disposable income is there, but the supply is not there.
Interesting.
And so for us as a business, we said if we go to Chicago and we open an online channel for the existing stores and we allow them to increase their business, not 3 times more, 15% more. We basically help them, and it all goes obviously to the bottom line, and if you want, we can develop it and explain why, but we can basically allow those stores, A, to prevent themselves from shutting down, and B, we can help others that just want to start dream bigger and understand that they can do more with the product that they have.
Awesome.
And because the demand is there, if you're judging by the education and the disposable income and by other demographic characteristics, there will be a customer that's going to buy.
Well, okay, let's wrap up by seeing whether you have any other great ideas for people to steal from you.
Oh my God.
Artizone might be characterized as providing delivery logistics as well as consumer education. I'm wondering whether there are other aspects of artisanal food preparation, marketing, delivery, which may be ripe for investor interest.
Because you said, ideas for people to steal, I'm gonna be hinting in this point. We believe that, food is a platform, but on this platform, what you're actually building are services, if you want to think about it like this. And so a service can be hosting a high-end dinner 2 times a year. Another service could be eating healthy all year round. Another service would be food gifting, and another service would be teaching yourself how to cook for your kids, and so on and so forth.
Yes.
All those services need a perfect platform and a perfect home delivery system and a perfect access to great products. It has to start with a great product.
Yes.
What we built is a platform that allows us to slowly start introducing those services. And so the recipes was just the first swallow. The second one that was just announced in Chicago was the home chef that you can order to come to your house and cook for you. The chef needs to get access to great products, and if those products are spread all over the city, then Artisan is there to help the chef curate all those great products and cook a better meal for you. And we are now in the process of developing a few more services like this. I call them verticals of food services, but they are a company. Each one of them can be a company of its own. And I think that thinking about food in this way of a platform and then vertical applications on top of it is fun. It's eye-opening.
Well, I'd have to agree. Sign me up. Anyway,
waiting for your order.
Lior Lavy, it was a pleasure talking with you about your business model, your thoughts on investment, and these exciting designs you put into place.
It was a pleasure to talking to you. Thank you for having me.
You've been listening to Accredited Investor Markets Radio. I am Christopher Cahill. My guest has been Lior Lavy. Accredited Investor Markets Radio is produced by Stephanie Straight. If you have any questions about this program, please email me at ccahill@financialpoise.com. Let's do this again sometime soon.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.AIMkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short-written summary of this episode, go to www.AIMkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.